We're with Jennifer Humphrey of our Credit Services Division. Is this the appropriate title for you? Are you Queen of Credit Services? What is the actual title?
Yes, Queen is appropriate.
Okay. Your Majesty, welcome. Wanted to share with you just a very quick topic that is becoming much more prevalent. We're seeing it in the lending world. And one of the benefits of working with a company like Nova is we have people that are focused on these challenges. And as soon as they emerge as potential concerns, we have the ability to identify. And really want to talk now about the buy now, pay later concepts that you see every time you check out, like at Amazon or some of these other places. And you on the credit side are starting to see this because some of them are reporting to the credit bureaus.
Correct. We're seeing a huge amount of firm accounts reporting. Some of them are reporting as collections now with lates. And ultimately, we're seeing the impact targeting people with credit scores of 620 or below. And we're seeing a negative impact to these accounts.
So already having someone has some challenges, and a lot of times they're probably like an FHA borrower, and now they're being saddled with some of these additional debts, which on the surface, I think if you look at an example of buy now, pay later, it kind of makes sense for a single transaction under certain circumstances. But what we're seeing is people are doing this multiple times. And so now it's not a single transaction. It's
10, 15, 20 separate accounts, because each purchase that you make through a buy now, pay later account is a separate trade line. Whether it's reporting to the bureaus or just showing up on your bank statements, they're all individual.
I think the attractive piece of it is that you just break up what you pay into some installments over 3, 4, 5 months, and that seems kind of easy to manage. Where's the challenge come in?
It does, but it snowballs. So you might do it once and think, I can split this purchase up into 4, and it's easy. They just take it right out of your debit account, and then you'll do it again and again, and then you start snowballing, and ultimately what happens is then it feels like you're drowning then. One transaction can turn into 5, 10, 15. Then you can't catch up. Then all those small payments are adding up and impacting you. Drowning.
And you don't pay interest on the account, correct? If you pay everything on time, you don't pay interest, but there's a huge penalty, or is that?
So every account is different. There's several of them out there, but ultimately, let's say you miss a payment and you're late, then that interest is around 30%, and not of what you owe now, but it goes all the way back to the original purchase amount. So let's say you bought something for $500, you're on your last payment and you're late. Then there's that penalty of the interest going all the way back to that $500 purchase. And 30% is huge.
That is a huge amount. And you said these are always automatically deducted from your account?
Correct.
So if you have multiple coming out and you're not tracking it.
Yeah, that's when it starts snowballing.
And you end up with the NSF fees now. I've seen.
Correct, yeah.
And now do these all report to credit bureaus?
No, right now, as it is, only Affirm reports. The other ones like Afterpay, Zip, Klarna, they're not reporting to the bureaus yet.
I'm learning a whole bunch of terms right now.
And there's many more. And I imagine over the next year, we're going to see even more names pop up. But those are not reporting to the credit bureaus yet. Okay. But they are showing up on bank statements.
Yeah, that's where I just talked to a colleague of mine that was doing an FHA loan, and the underwriter noticed that they had almost $500 a month in pay now.
Buy now.
Buy now, pay later. Yeah, if you pay now, that's good. Pay now, buy later, that's a much better concept. But this almost caused this person's opportunity of home ownership because they had so much on there that it affected their debt-to-income ratio. Luckily, Nova was able to get it done, but that's kind of a scary proposition. It's no longer just about credit reports and income and assets. We have to really scour those bank statements to look for these.
Yeah, 6 months ago, this wasn't even as big of a deal. But now underwriters are definitely taking notice of it. They're scouring through bank statements to see, because obviously this is debt. And so we do need to take all that into consideration when they're purchasing a house.
Yeah, and with interest rates rising, this looks like a no interest kind of option in some cases, but those penalties can be quite severe.
Correct.
Jennifer, thank you for your time. Appreciate you putting this on our radar and making us aware of it. I'd heard rumblings of this, but not nearly to the degree to which you made us aware today. So thank you.
Thank you. Have a good day.